Despite headwinds and fears, Wall Street managed to develop a steady rally last week. The lion's share of the rally occurred on a Friday, as the benchmark stock indexes gained 1.15 and 2.05% intraday. This week, stock investors will clear up the fundamental picture from inflation data, producer prices, and consumer activity. The economic calendar is empty on a Monday, and the stock market is trading quietly. The US credit rating downgrading is a new worrisome sign for risky assets, though not alarming. The New York session on a Friday was the most successful for the Nasdaq index. It jumped by 2.05% intraday. Moreover, the S&P 500 closed at the strongest level since September 19. The index added 76 points or 1.56% to close at 4,415 points. The major stock indexes traded with less confidence in the New York pre-market. The S&P 500 dipped below 4,440. Futures on the stock indexes traded 0.17 and 0.24% down before the opening bell. The S&P 500 is expected to trade in the intraday corridor between 4,390 and 4,426 points. The pessimistic scenario suggested that the index might slip to 4,364 points. According to the optimistic scenario, it could climb to 4,340, and the catalyst for the rapid rally on Wall Street on a Friday was the high-tech giants, whose shares notched considerable growth. At the same time, the fundamental picture was obscure. The University of Michigan reported on Friday that consumer confidence in the United States had declined in November for 4 months in a row. Inflation expectations of households went up again. On the plus side, the stock market found support from the fact that yields of 10-year treasuries did not change and closed at 4.62%. In this context, all 11 sectors of the S&P 500 finished the session on a Friday in the green, with the high-tech sector logging the most impressive growth of 2.6%. Nvidia shares surged by almost 3%, Meta shares jumped by 2.6%, Microsoft shares climbed by 2.5%, and such notable growth helped the benchmark indexes close the turbulent week with gains. As a result, the Dow Jones closed the trading week 0.7% up. The S&P 500 printed a weekly of 1.3%. The Nasdaq added 2.4% last week. And Wall Street moderated optimism in the New York pre-market on a Monday. The market pulled back from early highs as investors found out a grim piece to the macroeconomic puzzle. So, Moody's rating agency cut its outlook on the US credit rating from a stable to negative, citing large fiscal deficits in decline in debt affordability and confusion in Congress. It's the last of 3 top rating agencies supporting the prime rating of the US Treasury. Earlier, Fitch downgraded its rating in August, and the S&P removed its AAA label in 2018. In 2011. On the positive side, the AAA rating was maintained despite the gloomy prospects. On the negative side, it's a worrisome signal for markets. U.S. House Speaker Mike Johnson on Saturday introduced a Republican stopgap spending cut measure aimed at averting a government shutdown on Friday, but the measure quickly faced opposition from the lawmakers from both parties in the Congress. The gridlock means there is still a possibility that the government could be shut down as soon as Friday. Importantly, the stock market gave a muted response to both the credit rating revision and the imbalance in the government. It seems investors have not yet decided what stance they should take. Indeed, despite the obvious risks and the current situation may force the Federal Reserve to be more cautious. Inflation report for October is sure to take center stage this week. The CPI is due on a Tuesday, and the retail sales report will also be on investors' radars on Wednesday. Consumer inflation is expected to remain high last month. Analysts project a contraction in retail sales. US top retailers will grab investors' attention this week. Tyson Foods is due to report on its quarterly earnings later today. Home Depot on a Tuesday, Target on Wednesday, Walmart on Thursday. Boeing shares rose by 3.7% before the opening bell in light of the news that China is considering resuming purchases of a 737 MAX aircraft when the presidents of the United States and China meet this week at the Asia-Pacific Economic Cooperation Summit. Apart from corporate reports, it makes sense to take notice of comments by Fed policymaker Lizzie Cook. The currency market is opening a new trading week quietly. The US dollar's growth against the yen, as well as the advance of the pound sterling amid the cabinet reshuffle, the most remarkable moves today. On the back of lackluster New York pre-market, the US dollar index climbed by 0.09% to trade at 105.90. The intraday CAD for the index is defined at 105.67 and 106.10. The US dollar index is trading water against most major currencies. The greenback hit a one-year high against the yen, not 5A, from a 33-year high set in October last year. Global currency markets are trading sluggishly as traders are anticipating the US inflation data due on a Tuesday, and they will be looking for clues as to whether the Federal Reserve will cut interest rates next year. The US dollar has topped out at this stage. It's had to find fresh impetus for the greenback until economic data clear up market expectations. And the Canadian dollar is losing ground against its American peer slowly but surely. The USD CAD pair opened at 1.3824 and 0.18% up. The instrument is likely to trade in the intraday CAD between 1.3790 and 1.3852. Despite some support the loonie received from a growth in oil prices, it's on the way to a one-year low at 1.39, printed on November 1. The economic calendar for Canada is empty this week, so the outlook for the loonie will depend on the US dollar and the oil prices. Though oil prices rebounded marginally, they were wound down by concern about global energy demand. In turn, the Canadian dollar remains under selling pressure. Meanwhile, the crypto market is trying to regain its footing following a series of failed attempts to update highs and lows. Bitcoin wanted to settle at 36,900 in the pre-market but slipped by 0.9% to trade at 36,850 in the early American session. The information background did not bring important news to the crypto market, hence popular crypto assets are trading sluggishly without a common dynamic. The intraday outlook for Bitcoin suggests trading within the corridor between 36,750 and 37,250. The exit beyond these borders could push the price either down to 36,350 or enable to retest over 37,600. Follow developments in the global financial markets on the InstaForex TV channel. Ask any questions or leave your comments. So good luck in your trading.